This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back. There are nearly 1,900 homes scheduled to be auctioned this week. That's up 42% when compared to the same week last year. New South Wales will hold 723 auctions, and that's up about 100% on last year. Victoria will hold 782 auctions. That's up about 50%. Queensland will host 191 auctions, with 99 of them in regional areas. South Australia has 100 auctions scheduled, with most of them in Adelaide. Western Australia, Tasmania and the Northern Territory will hold 7 auctions between them, and the ACT will host 61 auctions. Taking a look at the most viewed properties going to auction this weekend, and in Victoria, it's 25 Hawthorn Grove Hawthorn. The price guide is $6.8 to $7.3 million. Top property in New South Wales is number 2, 369 Old Northern Road, Castle Hill. This 3-bedroom townhouse has a price guide of about $1.1 million. Most viewed property in Queensland is 33 Ross Crescent, Sunshine Beach. This huge property has a 62-metre beach frontage. In South Australia, the top property is 52 Ormond Avenue, Door Park. This 1925 bungalow has been cleverly modernised and has parking for 8 vehicles. And the top property in the ACT is located at 3 Andrew Crescent, Calwell. And the most viewed property on the REA Group website this week is number 16 Baringa Road, Croydon North, on the outskirts of Melbourne. This 5-bedder called the Black House sits on about 1,300 square metres and includes multiple living zones, high ceilings and polished floorboards throughout. And as you can tell from the name, the entire exterior of the property is black walls, black roof, black window frames. You get the idea. There are also some rooms painted black inside too. The large kitchen and adjoining living space has bifold doors which open to the outside alfresco area. Property also comes with a decent-sized garden with vegetable patch planter boxes, a large fire pit and parking for 4 vehicles. Price guide for this one is $1.85 to $2 million, and it's open tomorrow at midday. For more on property, I caught up with Angus Moore from REA Group.
We're seeing a pretty solid weekend in terms of auction volumes, and that really has been the story this winter. It's been surprisingly busy for a winter period. That said, it's still quieter than what we were seeing in autumn, which is normally the case. Autumn is one of the busiest times of year for auctions, a little bit behind kind of October, November, the peak of the spring selling season. So the fact that things are quieter at the moment, not a surprise.
But clearance rates, how are they holding up?
Seen pretty good conditions actually throughout winter, despite the sort of quieter conditions overall. Clearance rates in Sydney and Melbourne have been bouncing around sort of mid-60s through most weekends, which is pretty solid. It's not quite as good as we were seeing in late autumn when clearance rates got as high as 70%, but still pretty solid and certainly much better than we were seeing in spring 2022 when conditions got pretty soft.
And how long are properties taking to sell right now?
Yeah, we've actually seen it get a little bit longer over the past, let's say, 12 to 18 months. Now, that's kind of consistent with the broader slowdown in housing market conditions that we've seen. But if we look over the longer period, things are still better than what we were seeing in 2019. Homes are selling quicker, and it's actually been pretty stable for the last sort of 3 or 4 months. We haven't seen it getting longer over that period. So, again, a bit like clearance rates, a bit like volumes, things have looked relatively solid this winter.
Property price report came out this week. What did national prices do during July?
Yeah, as has been kind of the case this year, we're continuing to see prices recover. So nationally, prices are up 0.2%, which is not a lot, but compared to what we were seeing last year, it is quite a big turnaround, when we were seeing prices falling pretty briskly through much of the back half of last year. So that continues what we've been seeing across the first half of 2023, and prices are actually up 1.6% now compared to where they were at the same time last year. They're still below peak. They're still about 1.5% below peak, but we are certainly seeing a recovery.
Yeah, and just looking at the stats for both property price growth in Sydney and Melbourne for comparing July with June, it does look like growth in prices is starting to slow in those two cities.
It does look like that. We did see a bit softer growth this month than we did in June, particularly Melbourne. Melbourne's seen pretty sluggish growth this year. Sydney and Brisbane have both seen pretty strong rebounds. Sydney maybe a bit less so in July, but broadly over the sweep of the last 6 to 7 months, it's been pretty solid. Melbourne, on the other hand, growing pretty slowly. Prices were basically flat in July, and the recovery there has been slow. But importantly, prices aren't falling. So it is a change from what we were seeing last year.
Just shifting to the economy, the Reserve Bank's statement of monetary policy was out this morning. Looks like they've downgraded their GDP forecast for this year. Not really a surprise, is it?
No, I think we've seen some indicators that suggest growth is going to be a bit more sluggish this year. Retail spending looks pretty soft at the moment. We know that construction activity is starting to feel the bite of higher interest rates, and we are going to see less in terms of building activity over the next 12 to 18 months than perhaps was the case over the previous 12 to 18 months. So that's obviously going to weigh on economic activity. And of course, consumption, retail spending, what households spend, it is the largest part of the economy. So a slowdown in that is going to have a material impact on overall GDP growth.
And reading through the document, you sort of get a sense that the Reserve Bank almost feels like 4.1% is the limit for the cash rate in Australia.
Yeah, I think, maybe more than I was perhaps expecting 2 weeks ago. It looks like we might be at the peak, and certainly that's what markets are pricing in at the moment. I think the RBA is balancing the risks from that economic slowdown and the fact that growth is going to be pretty sluggish this year with the fact that inflation is still too high, and will remain so. Their forecasts still have inflation not getting back to the target band until mid-2025, which, to be clear, is still 2 years away. It's a long time. So I think they're still balancing that up, but I think they're increasingly concerned about that economic slowdown, and that's why it looks like they might be through this hiking phase now.
Yeah, it does feel like there is a shift towards the concern now not being interest rates going higher. It's now how long they're going to remain at 4.1%.
Yeah, I think that's a fair characterisation. And, certainly what happens to house prices next year is going to be largely dictated by that. Higher interest rates are obviously a headwind to home prices, and the fact that we've had a recovery this year notwithstanding. And so how that shakes out, how inflation shakes out, how economic growth shakes out, and importantly, how the labour market, which to date has remained really strong, how that shakes out will really determine what happens to interest rates over the next 12 to 18 months.
Yeah, really quickly, what's your forecast for prices for the rest of this year? Because I know you had another report this week.
Yeah, we did. So we've been surprised by the strength in home prices. We had expected that prices would probably continue declining through at least the first half of this year, just because of how much higher interest rates are. That's obviously not what's come to pass. Yeah. We've been a bit surprised by that. In terms of looking forward, our expectations are we'll probably continue to see a bit of growth this year, but fairly slow. As we were saying, price growth hasn't been that brisk over the recent months, and we'll probably expect to continue seeing some of that. Not quick growth, but a little bit of growth over the back half of this year. And then next year, as we said, a lot of it's going to depend on interest rates, and that's very uncertain. But, if interest rates kind of play out a bit how markets are expecting, we'd expect we'll continue to see home price growth next year, but not a lot, sort of low single digits nationally.
Angus Moore, thanks for your time.
Pleasure. Thank you for having me, Ed.